Welcome back, everybody. We have a lot to discuss in today's video here, especially with the massive day that we have in the markets tomorrow with the FOMC meeting coming out at 2 p.m. Eastern time. That's when we're going to get the interest rate decision, and then we're going to get the Q&A at 2:30 p.m. Eastern time, as well as Jerome Powell's prepared remarks here. So we're going to be going over all of the most important data that you guys have to be aware of going into tomorrow so that you guys can prepare for anything that is thrown our way. And as always, we're going to be covering some of the really interesting news on a lot of everybody's favorite stocks here. Palantir, again, not performing very well in terms of its share price here after the earnings report that was released yesterday. We made a video about that yesterday. Again, that was very, very expected, especially if you've been watching these videos here, that again, the market is going to be holding Palantir to a little bit of a higher standard now, especially after the moves that it has made over the last year and a half. But there's a brand new partnership here with Elon Musk that we definitely need to talk about. SOFI engaging in new partnerships, and HIMS also hinting at the fact that there's going to be more collaborative efforts moving forward. You guys all know what happened in terms of HIMS share price after that Novo Nordisk partnership was released, and we could easily see a lot more of those moving forward here. But guys, we have a lot to discuss in this one. So again, before we get into all of that information, if you guys do enjoy the information and analysis that I provide for you guys in these videos here, make sure you guys go down and hit that like button. Costs you nothing to do it, but helps me out a whole lot in spreading this information out to as many people who actually want to learn. And again, if you're not subscribed yet, make sure you guys do and turn on notifications so you're notified every time these videos do end up getting posted live. And for those of you guys that are taking advantage of all of the volatile moves in the market here, one of the main issues that day traders have as a whole is being significantly undercapitalized. And again, Apex Trader Funding is back with another one of their 80% off sales. Everybody, you guys can get up to $6 million in funding to trade with. So if you guys are interested in taking advantage of that absolutely insane deal, use code VIX with that link down below, fully capitalize yourselves, and really go out into the market and turbocharge your gains. Now, let's get into the first piece of data that I really want to talk about here. So remember, the Fed is really looking at two main pieces of data in order to make their decisions: the labor market and inflation. Now, recently, with what we have seen with the inflation data here, we have started to see it move to the downside. We're looking at PCE right now. This is the Fed's preferred metric of inflation, and we have started to see this tick to the downside here. February, we saw that year-over-year increase of 2.7%, and when we came into March, we saw that 2.3% year-over-year increase. And again, that is getting a little bit closer to the Fed's long-run 2% target here. But one of the major themes that we're going to talk about in this section of the video here is that there's some significant lag effects taking place right now, and we don't necessarily know what the true results of a lot of these new tariff and trade policies are going to be on the market in the immediate short term. We have a good understanding of what they are going to be in the medium to long term, but in the immediate short term, things are very, very uncertain. Now, moving forward, again, as a result of a lot of these new trade policies, we did see imports skyrocket, which are subtracted from GDP. And again, that is one of the main contributing reasons why we saw GDP decline in the first quarter of 2025 here. So when you are just looking at face value at the data here, you would say, okay, inflation is starting to move down. Growth is starting to slow down as well. And unemployment, as you guys can see over here, kind of that third element here, is slowly moving to the upside, but again, with no real meaningful increase in unemployment yet. So just looking at the data at face value there, you would expect that some of these projections for rate cuts in the very, very near future would start to move up, but they're actually doing the exact opposite for a couple of reasons here. Now, first, I want to show you guys these expectations. For May, there is only a 3% probability of the Fed cutting rates tomorrow. This is something that we've talked about on this channel a lot here, that it really does not make any sense for the Fed to start cutting rates in May, especially when you're viewing these moves from the Federal Reserve in the context of what they've already said. We really started to see the Fed laser focus in on the potential risk to the upside of inflation really from that December FOMC meeting minutes. And it's been something that Jerome Powell and a lot of the other FOMC members have been very narrowly focused on here, while kind of discounting the slowing growth effects and the potential risk to the upside to unemployment. Now we can see here, it is behind my head here. Let me actually see if I can move myself over. Right over here, you guys can see that a month ago, the expectation for rate cuts at this May meeting was about a 33.3% probability here. And again, now that is sitting at 3.1. When we move over to June, a month ago, we had about a 63.9% probability of the first rate cut happening in June. And now that has moved down to about 31%, as we can see here. And the prevailing expectation right now is that we are going to start these rate cuts in July. Now, the Federal Reserve has already come out and said that they are okay with being a little bit behind the curve because of the mistakes that they have made over the last couple of years here as it relates to rate cuts, rate hikes, and inflation as a whole. And again, this message right here from Nikki Leaks, again, he's also kind of known here as the Fed whisperer. People have kind of speculated for a while that he's the one getting a lot of these leaks from the Federal Reserve. But Fed officials agree that rate cuts aren't appropriate until they see concrete signs of slower spending and higher joblessness, which we are going to talk about in a second here. But differences are flaring over how confident officials can be that price increases from tariffs and shortages will be temporary. So higher joblessness, we already talked about in this video here with that unemployment rate. It is slowly moving to the upside, but nothing too aggressive yet here. And one of the main things that the Fed is looking towards to gauge this potential one-time price increase is a lot of what's been happening here with these container shipments. So according to data compiled from Ocean Carrier Manifest Records by Port Optimizer, the number of arrivals this week is on track to be down about 11%. So this is a little bit of an old article here, April 28th. So not this week, but a prior week here. But you can still see that container shipments to the United States are significantly decreasing. Now, the one thing that you have to realize about this, and this is where we touch on those lag effects, where it takes about 20 to 25 days for these container shipments to get from China to the US on the West Coast. And it takes an additional about 10, 15 days to get all the way over to the East Coast here. So we have not necessarily seen the full effects of these container shipments actually moving to the downside. Now, if the supply of a lot of these goods and services is significantly decreasing and the demand stays the same, just think about the normal supply and demand metrics or dynamics in any market. Well, you could expect to see prices move to the upside, which is what the Fed is worried about here in the present. And then moving over here, we talk about slower spending. Now, we all know right now that consumer sentiment has been falling through the absolute floor here. And in general, consumers expect prices to be significantly higher or inflation to be significantly higher than what the actual inflation numbers are right now. I believe the overall expectation right now is 6.5%. If you average it out, again, by political party, Republicans, we've shown this chart many times, but Republicans are really on the low end. Independents have started to catch up to Democrats there, with Democrats leading with significantly elevated levels for their expectations for inflation. Now, when you think about what the effects could be of some of these inflation expectations here, well, you could end up seeing a situation, which we talked about the two different outcomes here in the past, where people in general could just be so disheartened by the overall prospects of the economy that they're just not going to spend any money at all. Or on the other side, they go out and spend a lot in the present on a lot of these different goods and services to really avoid the future price increases. And that's slowly what we've started to see. This is the retail sales chart right here, everybody. So retail sales in the US jumped 1.4% month over month in March, following a 0.2% gain in February, slightly better than forecasts of 1.3%. And again, increases as consumers appeared to rush purchases ahead of impending auto tariffs, excluding autos. Retail sales were up 0.5%. Increases were also seen at building material and gardening equipment, sporting goods, hobby, musical instrument, and bookstores, a lot of other places as well. So we haven't necessarily started to see yet consumer spending really starting to move to the downside here. So that is all of the data that the Fed is looking at right now, and you can see why, especially after that data, that they're going to be a little bit slow to move this time around, because there are still a lot of those risks out there to that short-term price increase as a result of this new trade policy here. And the Fed is really waiting to see how the dust settles with a lot of these trade negotiations. The problem with the Fed waiting, though, for these trade negotiations to finalize is that these can take a significant period of time in order to play out. Besson has talked about this. There's a lot of economists that have talked about this, that really these could take a year and a half, 2 years to really get finalized here. So at some point, the Fed is going to have to take a stance here and really start to look at the incoming data and say, okay, is there really a risk or a significant risk to inflation moving back up in the present here? Is growth going to continue to slow? And again, we just aren't quite there yet for the Fed to make that strong of a decision. So again, tomorrow, what we're really looking for is the tone of Jerome Powell, specifically as it relates to some of this new inflation data that we have received. Now, again, we are going to be receiving a new round of CPI data next week, which is going to show and kind of incorporate a lot more of the time when these tariffs were actually coming into the marketplace and the economy here. So next week, we're going to get a little bit more information as well. So I know we talked a lot about the overall macro data here, guys, but a lot of this stuff is very, very important. If you can understand the big picture of what's happening in the global marketplace, in the global economy, it makes it a lot easier to understand where the most likely moves are going to be next. And again, that's one of the exact reasons and ways that I was able to come out here and give you guys this zone up here on the S&P 500 futures as being a likely area that we would see a rejection. That's exactly what we are seeing throughout the start of this week here too. And again, we could easily see a move down here to about 55.26 here on ES. But again, it really is going to depend on what happens tomorrow with the FOMC meeting and the overall tone of Jerome Powell. So with all of that being said, guys, let's start talking about some of these individual tickers here. First, we're going to start off with Palantir. So Palantir, at the current time that I'm recording this, is down about 13.7% on the day here. And again, none of you guys that have been watching these videos should be surprised by that move, even after Palantir comes out beating expectations in raising their guidance for this year. Again, the market is going to hold this name to a higher standard now, more so than it has in the past, because of the incredibly rich valuation that it is possessing right now. It is going to be very difficult for a lot of these institutional investors or even retail investors to start buying this name up at all-time highs here, even with all of the growth that they are witnessing. At this point, Palantir needs to start growing into its valuation here, which can take some time, but this is still an absolutely awesome name. If you are in this one, especially from when I gave it to my private community at about $15 a share, again, this has been a big winner. You could take some profits here. You could sell some covered calls. You can pretty much do whatever you would like with this position right now. I think Palantir is going to continue growing, especially on their government side as well, with the increase in defense spending that we are most likely going to get over the next really year or so here. But in addition, we also have a new partnership here with Elon Musk XAI. Elon Musk artificial intelligence company XAI has partnered with Palantir Technologies and investment firm TWG Global, the company said on Tuesday, as they look to tap growing AI demand in the financial services industry. And again, one of the best parts about Palantir in the way that they've positioned themselves in the AI and data analytics space is that they're really not handcuffed to one individual sector, whether it's defense, whether it's healthcare, whether it's finance. They are able to operate and tailor their products to individual customers and clients in order to generate the best results for them. Now, in addition here, we also did receive some new price targets and re-ratings of Palantir here. Today, we have Wedbush moving their target from 120 to 140, Cantor Fitzgerald to 110 from 98, Deutsche Bank to 80 from 50, but they have a sell rating, Loop Capital 130 from 125, Mizuho 94 from 80, Morgan Stanley 98 from 90, and then over here, we also have UBS maintaining a neutral target, but or a neutral stance, but also has a price target of $110 a share for Palantir here. Now let's talk a little bit about SOFI before we get into HIMS here, because HIMS has been performing very well today. If you guys did listen to the video that I made yesterday on Palantir and HIMS earnings, I was honestly quite surprised that HIMS was not receiving a decent bump in the after hours trading period after they released those unbelievable earnings. But we're going to take a look at that in a second here. SOFI, again, continuing this post-earnings consolidation setup that we have been talking about on this channel over really the last week or so here after SOFI reported their earnings. Again, it's going to be very difficult to convince me to take on any new short-term trading positions with FOMC coming up this week. After that, we easily could see SOFI break out of this range here. The top side is around 1305. If that does happen, I think we could see a very, very quick move up to this 1390-14 area. And again, if we see some continuation out of SOFI and the broad market here, we easily could see that post-earnings high of around 1450 taken out. Now, again, they do have, and they did announce another pretty significant partnership today. Mercantile Banco chooses Cyberbank Digital from Galileo to embrace digital transformation here. So again, the collaboration will transform how Mercantile Banco connects with its customers by delivering a secure and flexible digital banking experience through Cyberbank Digital. The platform allows Mercantile to offer personalized, mobile-ready services that improve customer satisfaction and streamline operations. Its adaptable design lets the bank quickly evolve without major system overhauls, helping it stay competitive in a fast-moving market. So not necessarily the most groundbreaking partnership in the world here, but a partnership with Galileo here, an element of SOFI's business, which they are continuously trying to build and grow. That is definitely a positive for this company moving forward here. So now let's talk a little bit about HIMS, because this one is the big winner of the day here, currently up about 13.75% at the time that I'm recording this video here. Again, quite honestly, I was a bit surprised when I was looking at the after hours trading action of HIMS yesterday after the unbelievable earnings, in my opinion, that they announced yesterday. Revenue per user, significant growth. Their 3-year compound annual growth rate of their subscribers is in the 50s. Net income growth, free cash flow growth, a lot about those earnings were very, very positive. And it was very interesting to see the stock get knocked down in the after hours, now starting to move significantly back to the upside here. But one of the main things that we also have to think about is that HIMS didn't necessarily raise their revenue guidance for 2025. And I actually think that could be a positive for HIMS here. If you don't raise your guidance, you can then really come out and wildly beat some of those numbers that you have already set out for yourself, which I think the market would take very, very positively here. Again, this one has a lot of growth potential moving forward, not just necessarily with their business, but also with new partnerships here too. Yesterday in the earnings call, we also heard that over time, we expect wider collaboration across the industry, inclusive of pharmaceutical players, innovative leaders in diagnostic and preventative testing, and world-class providers. We believe this will strengthen our ecosystem and position us to curate a best-in-class offering that can reach tens of millions of people here. But again, we also have to remember that the big picture of the market, guys, is going to drive price action moving forward. We have a very, very big day tomorrow with FOMC, and with the prior tone that we have heard out of Jerome Powell and the Federal Reserve, it is likely that they still lean into their hawkish stance while also pointing out some of the positives about the American economy in the present. It would be very nice to see a little bit more guidance and a little bit more clarity on what the Fed is exactly looking for in order to start moving again to get those interest rate cuts in 2025 here. And I think a lot of that is going to have to do with what we looked at before with what Nick was talking about, Nick Timmerhouse, with a very confirmed move to the upside in unemployment, and also confirmation that inflation is not going to start roaring back to the upside here. Now, again, when you think about the inflationary effects of tariffs, they're technically only inflationary if the tariff rate continues to go up, because again, inflation is measuring the rate of change year over year. And if we just see a one-time price increase that gets put into the data, and then a year from now it is out out of the data, and we no longer have to worry about those one-time price increases here. And again, when you combine that with an already weak consumer, you could easily witness a significant drop in demand, leading to slower growth, increasing unemployment, and you don't actually have those increase in prices that a lot of these economists have been forecasting, because that's what their textbook has been telling them is going to happen. So we always have to think in reality, guys, and not necessarily the theoretical elements of what a lot of these economists are saying here. But we will get a lot more clarity tomorrow. I will be live streaming the FOMC meeting here, breaking it down, sharing my thoughts. So again, make sure you guys have notifications on. But until next time, guys, that is going to wrap up this video. I hope you guys have a great rest of your evening. I will see you in the next one. Peace.